Welcome everyone, Sunday evening. We've just got over the half year and we're about to start our big earnings season, which starts every year with the bank earnings, and there is so much going on in the world geopolitically. We've had some fantastic market moves, as we spoke about last couple of podcasts a while back, and pretty well much has gone as we would expect, and we're back here again where we're on the precipice of another massive big bond blowout, as it's been touted by many, or this is back to like a double top. And this week we have the US CPI amongst a lot of other things. So let's get into it. So welcome everyone from punters to investors to traders and straight out dribblers. Let's enjoy some ideas that we've got out there on the website, and thank you for all those contributed. Remember, this is not financial advice. This is just a couple of seasoned traders talking about what we've seen, what can happen, what we expect. We're going to go through it fundamentally and technically. You can go through it on the website. This is Andrew here speaking. It's just going to be me tonight. So let's get into it without further ado. Let's have a quick look at where we are right now. It's Sunday evening, so markets are open. And if you look at cash here, when we're going to talk about oil, and we talked about that on Friday, how it's really doing its best to break up to the top side. We've had a lot of goes at it, as we know. The S&P is trading around 4,400 in cash. So that's a big level, obviously, psychologically or whatever. And we see natural gas not doing too much here from where it closed. It's gapped up a little bit. Hot weather out there. So let's get into it. Let's look at what we're actually looking at this week and what has happened in the week just gone, right? So let me find it. It would help if I know where that is, right? So here we go. So each week the crew puts together this. So let's have a quick look. We're all familiar with this as what happened. And I think we can sum it up really on two major events. The ADP number came out on Thursday red hot. You know, yields went through the roof. We saw the 2-year go well over 5% there. US dollar went bid, stock market went offered. Then come along to Friday, we have the BLS, or the government release, and that was lower than expected. And what's interesting, there's been a lot of talk out there about analysts undershooting it 15 months straight. Well, straight out they're being wrong, right? But there was a lot of talk that this was the first one that was actually under that overshoot, which was interesting in itself in that respect. So we look at that. The thing that I would look at what actually happened here. So we had a lot of bulls taken out on Thursday, bulls of the stock market, bears taken out on Friday, right? Vice versa. And then it all went to crap on Friday afternoon. So that rally, so when we look at a chart, it's going to be, but I'd like to say without a chart. So we can think, so the number comes out, there's a relief rally, right, that it wasn't the ADP. Then in an hour or so into the close, it all gives way. And there was no apparent reason. So that's interesting. A lot of that's obviously to do with options, and it was thin volume because it was a holiday week. A lot of people took July 4th week off because it was on Tuesday. Monday wasn't a holiday for many, so many taking that off decided to take the whole week. So let's be real about it. So the big thing of notice was the switch in the 2 and 10s that we've been watching, the spread there on Treasury bonds. So that actually got wider and on Thursday, right? And then on Friday, that came in by 17 basis points by the end of the week. So down to just 89. That's still wide, but it's, if you want to consider it compressed by so much, 31 basis points in June and 49 basis points in the whole second quarter, and then then reverse the other way, 17 this week. So that's telling you a bit. The relevance of that is that's the Fed funds rate. That's what it's based on, and it also impacts a lot of things like currencies. A lot of this players we've talked about has been pushed up by the carry trade, which is specifically against dollar yen, and you can see it. We talk about this in the Forex Weekly, how the Mexican peso, for example, has been a good benefit from that, right? And bear in mind, interest rates aren't the saviour of everything. Anyone that's been watching the Turkish lira, that just keeps weakening and weakening. So if you recall, Erdogan kept cutting rates. He gets in, he says, we're going to rise it, Obviously, the punters in the street weren't happy about that. But he rose it by 15 or 215 from 8.5, which obviously is a big move to someone in the street. The market wanted it to be more brutal, to 25%. So they ripped the lira up even more so. So that's the reasons I'm mentioning that at the top. It's interest rates aren't anything, but the disconnect between the man in the street, the person sitting in an office getting paid, and particularly financial people is so distant. It's incredible. And it doesn't matter if you're in an emerging nation like Turkey with a leader like that, or in somewhere like United States or England or wherever. Okay. So anyway, let's go on and we'll go through this. So the reason, a very sanguine point here is, and I'll read it, this should remind you of the folly of relying on statistics and not having a plan longer than 2 minutes. So the whole point is you want to have a good idea of what you want to do, if you want to be in the market or not, but not be just trying to day trade it all the time, right? And you'll get, the more you trade, the more the risk is. Now, I obviously always say trade what's in front of you, but have a plan and be aware that statistics or releases, however you want to call them, are very, very fraught with danger, right? So the other thing we want to touch on, all we're hearing, it's almost as moment as those job numbers were out, it's going to be all about inflation. Now, every time there's an inflation number drops, be it the US or Germany or Australia, any of the influential countries, they'll go on about inflation, deflation, disinflation. So disinflation was kind of really a new thing that Powell started talking about. Inflation, deflation, we all know really well. Now, the more and more we get deeper into this, this whether it's a bear market rally or we did bottom, it's not the point here. People that are really bearish or really bullish, it's also attached to their ego and psychology, and they interpret those. The same number can be interpreted by each one of those different personalities or agendas or wishful thinking as inflation, deflation, or disinflation. That's kind of the point there. So that's why we look at how the crowd's reacting, where we are technically, relative to how it's all going on. And when it's not going as expected per the mainstream or the herd, whatever you want to call it, then you want to ask the question why, right? So very simple. If you go through these two reports, we had this on Thursday, yield surge after ADP reported 497,000 jobs added in June. The positive thing out of this is it's out of small and medium businesses. So the Russell is that, right, or the listed part of that. Now, we all know that that's the part of the community that's hurt most by interest rates, higher interest rates. Now, we keep comparing what we got now back to the recession or the depression in the 29s and 30s. So the difference is this time and that time, whether it's right or wrong is not the relevant. Leave morality and politics out of all this sort of stuff. The fact of the matter is they did print money. They did print a ton of money. And the other thing is people that aren't used to economic theory from university are now trading and investing. And we know a lot of economic theory is BS for what it is. You know, I studied economics at university. And I look at, and there's all these theories, monetarism, Keynesian, etc., etc. Everything has been distorted and changed. We have wars going on, pumping, etc., etc. So you've got to stand back and, why is this doing this, right? So there's all those factors need to be taken into account. So we come out the next day, and I guess you look at private jobs was also, so basically the official number was half of what this was, right? Now we're looking at different things, obviously, of government jobs, but that's the point. In actual fact, the number's even worse if you look at that, because most of the one of the big gains was government jobs. But 200,000, still, it's a lot lower than average, but what would you expect when the interest rates are being ramped up our face, right? Inflation is real in many things, but in other things there is deflation. Some things are more expensive, some things are not. So it all depends where you live, not just in what country, but in what state in the United States, etc. And also how you spend your money, how conservative you are, in spending, etc., etc. Willful, wasteful, are you, all that. The other thing in this, so bonds initially reacted with a quick sell-off, right? Then, meaning yields went lower. A quick rally. Yields went lower. Then they came back and finished just under 5%, around 4.95 on. We're talking 2 year. The reason is the number's still high enough. And if we put all the other job numbers, that the Fed is still going to be. And the other thing is wages are still at a level above their inflation target. Now, I have a different view on this to most. Wages should go up when prices go up. That's the whole point. You don't want to be destroying people just for the rich man, right, or the well-off. And I think a lot of people that are actually, if you're the capitalist bend, or in these days they call it right or left and all this, you want everyone to be properly compensated. It becomes greed when it becomes the other way. So to tie them in with inflation as they do, is kind of not correct, because wages, unless we go into a depression, are going to stay bid, right? But they're really just catching up. It is a low minimum wage in the United States compared to a lot of other countries that are doing much better without so much debt. So think about that. Now we're going to look at different bonds, and these movements in bonds are brutal on those without a good credit rating. Now that doesn't just mean you or I. It means other countries. And we get all this talk about BRICS and breakaway. Now a lot of that is just straight out political bias, right? They don't like America, or they don't like the current government. The reality is, and there's plenty of articles on Traders Community about this, is the US dollar has been falling away anyway, as far as a trade convenience, for a number of years. Because let's just take Australia and China and Japan and South Korea. They are all each other's more or less biggest trading partners. Yes, US is actually China's biggest, but when we're talking commodities and everything, so a lot of trade is done in the Australian dollar or the dollar yen, right? And we've seen the problems with BRIC, so India getting cheap oil from Russia. In many respects, is a good thing, because lower standard of living and all that. So, and just let me just say this, is we're threatening these countries not to buy Russian oil. Well, we could shut it all off with sanctions, etc., probably done. Just no oil, no gas out of Russia for 3 or 4 weeks, and you probably solve the problem, right? So, that said, they're paying for that oil with the rupee, right? Problem is, Russia's now got all this and they can't get rid of it. So then the last trade, I want to say last week, I saw that they paid for Russian oil with the yuan from China, which is obviously a little bit more malleable, or because it's in the BIS pool, etc. But then you have all this kind of bizarre trade war going on between America and China over tech. At the same time, China's warming up to Australia again because obviously need the commodities. So you got all these weird dynamics. So you can go on if you want to and think everything's fake. If you're anti-American, pro-American, pro-Putin, how anyone's pro him, even his wife doesn't like him, right? Now let's be serious. You've got to look through and think things logically rather than what you want them to believe or some political bent, particularly if you're on things like Twitter or Facebook. Now that's even going to get... So here's another thing to talk about. There's all this anti-Musk stuff for whatever reason. Obviously the guy's high ego, all that, easy to dislike or easy to like, depending on it. But we've gone through a period where everyone hated Zuckerberg and Facebook or Meta because of the data, stealing the data he's treating. And we're all familiar with what he said about his users. So if we go threads, think about this another way. Instagram is also Meta. All of a sudden, the guy you hated is now the one you like because you hate this guy more. So that's exactly the same as what politics has become. People voted in the States for Joe Biden because they hated Trump. Not so much that they liked Biden, etc., etc. And this is in nearly every country. It's just we're American, so pointing that out. This mentality is something that you don't want to affect your trading or investments, but you want to take advantage of it. That's why you get these very big moves in bonds and stocks. In stocks, for example, we've spoken about it ad nauseum on here. NVIDIA was one of the big favoured ones back in 100 we liked, and we don't really give recommendations, but we point out the charts and what's going on. By the time it gets to the man in the street, the risk level's through the roof, right? So anyway, think about all that. And the reason we went on about that is because we want to look at what bonds are doing. So the US bonds, we basically have the investment grade, the LQD, the high yield HYG. These are ETFs because I know a lot of you aren't actually going to be trading the bonds. And so on Thursday, it fell, the LQD fell 1%. Remember, that was the violent day after ADP. The next day it comes back. That was the largest loss since May 1. And it fell 2.4% for the week, the largest since February. Remember, this is bonds and an ETF, so it's meant to be a little bit more stable than a tech stock, right? Now, what's interesting, the high yield HYG, junk, etc., corporate, fell less on Thursday and less for the week. So important thing to grasp, the better quality ones falling more. That's a lot to do with optionality, the people are in it, and remember it was a thin market. And look at these headlines I put in here from Bloomberg. HYG ETF daily outflows 1.3 billion. Biggest move since March 28. Two giant credit ETFs hit by 2 billion exit on hawkish Fed bets. So what you're getting is the ETF. These are big numbers, 2 billion out of it on one report that the next day goes the other way. Now the Fed, I think everyone wants to blame Powell. Powell's been pretty on this. We talked about this with the banks blowing up. Powell's been pretty on board about they're going to keep raising rates, right? So billion out of it on one report. If that's the case, why is all this a surprise, let alone spinning it around for 2 billion? So it gives you an idea how much money is being punted on algorithms, and you can bet a lot of the big money managers had the week off. Okay, so that's there. Let's now look overseas. Let's look at Thursday in particular. We've been talking a little bit about what's been going on in the bonds in England or the UK, Germany and France. Right now, they started, if you want to go back to the last inflation numbers, this is where this really started in England. You had the really high inflation again, and then the Bank of England rose more than expected. We had another wild day, not like the gilts one way back when. But so that's a few weeks ago. Now let's go back to a few days ago. The 10-year yield of the what's known as the gilt rose 16 basis points on Thursday to 554. With 2 years, so that's similar, remember, to the US 2 years, the significance surged 18 basis points to a 15-year high at 5.54. So this was reminiscent, as we said, of last fall, right? When all that panic happened, the pound collapsed, the Prime Minister was tossed, their Treasurer, which is called Chancellor of the Exchequer, was tossed. Now, the 10-year yield for the Italian bond surged 21 basis points on Thursday. Remember, what happens is very quickly, because greed is overtaken, fear of missing out and fear of being caught by someone else making more money than you or better returns, is outweighing the risk. So Italian and Greek yields, bonds I should say, were being bought. They were sold heavily on Thursday. So the 10-year in Italy fell 21 basis points, in Greece 18, in Spain 17. So remember, the flip side is the yields rise, the bonds fall, and Portugal was also 17. So let's come closer to home. We've been through the US one day earlier. So Canada surged 30 basis points this week to an 8-point high of 357. We have the Bank of Canada meeting this week. And the question is, will they raise or won't they raise, right? So they're good at surprising. So it's going to be interesting. The RBA stayed pat last week, but their 10-year Aussie bonds jumped 23 basis points this week to 426. That's the highest since January 2014, almost 10 years. Over in New Zealand, which also has a central bank meeting this week, the RBNZ, rose 22 basis points to 485%. These are big numbers. So these are all established economies, right? Europe, etc., etc. Now let's look at the emerging nations. So we have two sets of bonds, and the BRIC people better want to be aware of this, right? So there's so much jargon out there that's just rubbish about all this. So there's local currency yields, dollar denominated yields. Now the significance of this is currency risk, right? So it's local currency. You don't have the currency risk if it's dollar denominated or another currency, be it Swiss francs, which is the famous one from Australia. You have that currency risk, which a lot of, that's why a carry trade's popular. The yen weakens, low yields, you borrow in it. Where it all goes to crap is when the currency falls against you. Okay, so let's look at local currency yields. The Hungarian rose 33 basis points this week to 733. South Africa, one of the BRICS, rose 32 basis points to 12.07. Remember, that country also has civil unrest, and basically they're relying on raw materials such as gold, etc. Mexico rose 25 basis points to 8.93%. These are high numbers, which makes it difficult for them to grow. In dollar-denominated debt, notice this is lower, right? So you got 20. The reason being, a lot to do that's with hedging, or safety. So we had Chile, Indonesia. So Chile, Indonesia, Colombia, Philippines, and Panama all raised between 23 and 25 basis points, the yield. Okay, so these are all significant and right on precipices. They're right around big levels. Now, you would think a lot of this is hedged, but you don't know. Okay, so again, always read this, what happens when a market gets caught short. Let's look where we are year to date. So we're still very much the strength this year. No surprise has been in tech, communication, discretionary communication services with Nvidia, Apple, etc. Technology, 37%. The weakness this year has been in energy, down 7%. But think that was by far the biggest winner last year. So some of that's just giving back a little bit. We did have that manic rise in oil. You know, 130 plus back to like 60. Now it's around 70. Natural gas got over $10. Now it's $2. So there is all that to consider in that. So the global debt minute, I won't read it here, but do yourself a favour and look at just how much is out there. And this gets updated every quarter, so there's a new one to come out about that. So how is the consumer hanging? Because that's really what it's all about in the US, right? 90% of our economy relies on services, so 90% of the GDP. So when we look at things like California and New York, right, the significant things with that is that's where they went broke. That's where there's a lot of debt and a lot of consumers, obviously. Two of the biggest states in the US. So we're going to look at earnings this week. The start of earnings season, as I said at the top of the broadcast, for big banks. So you got your money center banks, obviously Jamie Dimon and JP Morgan, that's who everyone hangs their hat on. But you got Citi, Morgan Stanley, Wells Fargo, etc. You've also got PepsiCo out this week, so that'll be interesting. Delta Airlines, so that's interesting for oil and gas people, but also consumers, and of course BlackRock. So that's to look at who's investing and who's not. We look at those numbers of money under management, right? So there is no fear really, and that's an interesting concept. But as soon as something happens, the VIX goes nuts, right? Look what happened on Thursday. VIX goes from like 15 all the way up here to nearly 18. That's 17. Like I'm being a little bit. By the end of the day, I mean, so that's 2 weeks ago. The week that just happened. Look what's happened. So each time this happens, and they happen so quick, people are losing on their puts unless they're evacuating or they're rolling a spread or, you know, doing a put spread or a call spread, right? So what eventually happens with all this, but all these spikes, if you look at this chart, you can see how it comes back, right? And this gap didn't quite get filled here, if that's relevant on a VIX chart. I mean, I don't think it really is because it's kind of a made-up thing. The question we want to know is fear. But so the point is people are worried because we see it go really quick. Oh, shit, this is it. This is all they talk about, recession, end of the world. Well, the numbers aren't really recessionary, and we've been hearing about this for 2 years, right? So let's look what we got ahead this week real quickly. So the big thing is bank earnings that we touched on. We've also got potentially a lot of dovish data coming out of China. And we have the UK job market is going to be hot. Now the BOE is going to be coming up soon. Let's see how hot that still is, right? Central bank wise, we got a slew of Fed speakers. We have the Beige report. We have Bank of Canada, RBNZ, Z, I guess, but it is New Zealand, so we'll stick with Z. Peru and Bank of Korea. Korea is going to be interesting what they talk about their currency, right? Now, we're not going to go into too much now, but it's important to remember when the yen weakens, the yuan needs to weaken, and so does the won because they all compete with each other, right, at cost of exports. So it's not just some big geopolitical thing going on. It's also a lot to do with pricing. And the US want a weak dollar. They don't want a strong dollar so they can compete overseas. It depends, right, where you are, which company it is. So all this pro and anti stuff, the reason I'm going on about it is you want to be a little bit wary. Okay, big inflation stuff. We do have inflation numbers out for other countries, but let's focus on the US. We have CPI out on Wednesday. We then follow it up with PPI on Thursday. And then on Friday, we get the University of Michigan Consumer Sentiment Report. Now, what they're going to look at is the 1 and 2 year inflation numbers there, right? Inflation expectations. So the other things to look at as far as we're going to obviously get our weekly oil and gas numbers, our weekly mortgage numbers, our weekly job claim numbers, and those inflation. There will be some interest in the federal budget, but it's so big that it really becomes irrelevant. The only other thing for inflation will be the import and export. Separately, you can go to the central bank outlook, which will give you everything that happened last week in central banks and what's happening next week. Elsewhere, there's a link here on the Market Weekly. So there we go about VIX. Actually, this is the up. I don't think this is on the website yet, but that just came out for June and it fell again in June. So food prices completely falling away for the most part. So remember, a lot of this stuff is fear and gloom, right? Some articles about China. Don't misunderstand how deep China's problems are, right? So that is look at this. This is the inflation targets versus where actually the headline. Interesting graph. I want to say this was a few months ago from Bank of Scotia, I believe, but very handy. You can see. So this is actually inflation target. The only one even near it is South Africa, but that's only because it's so high. Look at where they are. Look at their headlines. So some of these countries are obviously got serious issues here. The lowest inflation actually is Bank of Canada, the US, Bank of Japan. And they don't have the RBA. Oh, yeah, we are. An RBA had that one pop up here, right? So you can see where it is. And China, if you believe their numbers, right? So it's not even bother touching on that. Interesting stuff there. Okay, so here we go back to CBE. You can see again the put call ratio is 105 on the index. Total is 0.83. So not a lot of fear, right? Not a lot of protection. So what they do is they keep piling on their protection. So last week we can see what we had. We really didn't come back too much when you consider that 4,500 on the S&P, they got that to go there right at June 30 for their bonuses, etc. Am I being too... But, for the long guys, short guys didn't do too good. The biggest winner again this week was Lucid, which was also the biggest winner the previous week out of the big stocks. Interesting. You can see Tesla again, another winner. What I found interesting here was Baker Hughes was in the top 5 there. We had Tech was the main loser there, other than AstraZeneca and Merck, drug companies. And Nike obviously was another disappointing number there. But you can see there's a bit of a change in the guard here. Interesting, Lucid was one of those ones that they pounded last year. EVs were hot last week. Big topic last week. And I think part of that was a bounce back from all that talk about China not exporting with some rare earths they're needed, right? So finally, the fallout in the rioting going on in France, which is interesting. It's not really talked about on mainstream media. It's been that way a lot of times with other countries in the US. You're not seeing the protests. And interesting, Macron is blaming social media for it all, So obviously not the case. It's very much in certain areas. It is. A lot of it has become immigrant-based or I don't want to get... It's hard to describe. So this isn't new to France. I actually lived there many moons ago, and these similar problems were way back then. There was actually bombings by Algerian terrorists and stuff like that. I don't think they call them that. So it's the same sort of thing that's going on. It kind of happens when you have low-income people put in the same area, different classes, and you get the whole racism, religious kind of element going on, right? So at the end of the day, in that country, you've had protests for a number of years now. With the yellow jackets, you've tried it. So it's not just about immigration, as you would have some people say. They basically shut down the country. So you had the yellow jackets, then you shut down the country with COVID. They were very brutal there. Then you had high inflation, with energy, etc. You had all those nuclear plants go on strike, so they didn't. So you've had many factors going on there, and Macron is deeply unpopular. So you've got all these things going on, right? So we look at Asia. No, so actually, sorry, I meant to mention, so France was down 3.9%, but it's also dragging down other countries. England was down 3.6, Spain was down 3.6, and Germany lost 3.4. Italy was actually the least down 1.6, which is interesting when you saw how much their bonds got smashed, right? We sort of talked about that just earlier. Over in Asia, you had declines, but much smaller. The biggest was Japan with 2.4%. The least was in China, 0.2%. They were hit more the week before, though. As far as emerging nations go, they're kind of just, no one's really traded. They're just totally manipulated. Like Turkey was up 7.4%. There's with their lira, their currency just keeps collapsing. That's over 26 now, the US dollar. And a similar situation in Russia, the ruble is collapsing. So their market was up 1.3%. You could be cynical and say, well, the buggers are day trading like they were in the US to try to make money, right? So anyway, in reality, a lot of it's to do with transposing it back to the local currency. So we look at the dollar yen, the S&P 500. You can see it went right in that nice spear of influence. So from the bearish point of view, this whole thing here would be a C wave, a rising wedge from 3,500 up to 4,500. That's 1,000 handles. That's correcting the whole movement. We're going a lot lower. Now, what I find amazing with Yuba Bears is they've been wrong for 1,000 points, but somehow the market's wrong. Now, remember this, the market's always right, and you leave your ego at the door. So from a bullish point of view, and we'll see it more on the weekly, this was the bottom of the correction. And we're building, something. I mean, obviously, this can still do a B flat if you're an Elliott wave person. But you can see what's going on here. Keep it very clinical maths. You can see how the Nova wave has just worked perfectly. And we did very well mathematically reading this, but this is also reading clouds. That's why you look at the patterns. Keep it simple. The way people react, right? And remember, the stock market is not the economy. And the stock market is not Democrat or Republican or Libertarian, black, white or brindle, gay or straight. It's none of that. It's a mass of all people. So you've got to leave all those biases at home. Well, you shouldn't really have them, really, right? But if you're trading, definitely not. So this spear influence is a mirror image of this. Now, is it temporary? Because really, this is just shifted up from here to here because it did this double top a number of times. See these key splits? We're now above it. We accelerated from here. So all this cloud, basically just think of a cloud as support. That's where people are trapped, if you will. Look at what's going on around the tank and the orange. And look at these Fibonacci's, right? And just think of Fibonacci's, what they, just in simple terms, 50%, 2/3, 1/3, right? So it means 2/3 are in the money, 2/3 are out of the money, that sort of thing. Obviously, it's not as black and white as that. So anyway, we see all this resistance. What I like about this retest here, it retested this previous high from back in August. So remember, the reason you look at charts is you want a visual of where everyone is. You can see that? And you can see, and the reason things work, correct in threes and go in five, that's simple human psychology. And there's truth in it. The most fearful person, when he finally goes long, or the greediest person goes short, however you want to put it, that's usually equilibrium, right? When it achieves equilibrium. And you got the fear of reflexibility, where things go up because they're going up. Right? Things go down because they're going down. So in oil, there's an old expression to do with that. Oil goes up because oil's going up, goes down, it's down. Anyway, so we look at the weekly. It didn't quite get to the top of this parallel. Now you can fiddle with it, make that fit if you want. That becomes a fit, but you don't want to do that. The point is, you can see it's right, this wall of worry. We look at it. So on the daily, we just looked at this. So from a bearish point of view, remember I mentioned that first bit, this here is correcting that. Now it would mean A, B, C, and we're going all the way down here, right? A bullish point of view, is that this correction here, 1, 2, 3, 4, you can get 3 into the circle, was correcting this big move up, right? Just keep it really that simple. So then we look at, okay, what's going to hold it up here? Are these rates, oops, sorry about that, are these rates, so if rates come down from this point, is that enough to get it going? Everyone's talking about everyone spending all their savings and all that, but that's not totally true because you got the highest work face ever. Yes, they're getting rid of their excess. And a lot of the reason the property market's different this time is because a lot of people don't want to sell because their interest rates are so low. You know, if you got an interest rate of 1%, 2%, you got to factor that in to the years going forward. Why would you want to sell here now? And when you got to go, particularly if you pay high different costs. So there's a multitude of factors. The point I'm saying it, you can spin whatever you want. So we look at the charts. Let's get back to them. And it's pretty black and white what's going on, right? You know where you're wrong and right. You can see the support and strength. The other thing we know, we have had manias. We had the Nvidia. That was a mania. We had the oil and gas. We keep getting these manias. And the reason they're almost manic is because there's less people playing the market, so therefore it's thinner and things like that, right? So let's look at the NASDAQ. Then look where the NASDAQ ran into, right? So they only start talking about the NASDAQ here in the video, etc. But look at this beautiful bottom that we're on, right? 1, 2. So when we look at this can still be a long 3, but it makes it harder to believe this whole thing. Just the pure length of it, it is the longest wave. For this to be bearish, that means it's got every single, by bearish I mean under this level, that means every bloke's out basically, and then it just collapses and wipes everyone out. Of course, that's a scenario, so just keep that in mind. But look, from a trading point of view, and we mentioned this coming into the beautiful way they ran that into June 30. We can see a clear double top, and we retested this break point. So there is convergence. That's why we look at options and the averages of where people are. Most people are happy just to break even. Most people hold on to losses, they don't hold on to profits, right? And you see that borne out time, and I've been trading a long time. It's the same thing over and over and over. Most people are in it. They love the gamble. Or their ego, they gotta be right. That's the whole political thing. Us versus them. Bulls and bears is even that, right? So there we go. So look at our support. We know that's a double top. So really to get going, we need to get through this. Then our next big level would be this plus 1.8. And look, there we are at all-time highs. That's all possible. The DAX did it. The CAC 40 did it. Someone else also hit a record high. Maybe Australia early in the year, but I think there's someone else. Now, the Dow's a little bit different. So Dow's the old slow one. It did not even get over this high here, right? See that? So this is different people. But it does have Apple in here. So it makes you wonder, and it does have, Exxon's out. They took Exxon out, my bad. So it does have Apple in here, so it makes you wonder how bad many of these are actually performing, right? But that's more slower part of your economy. So you can see just how big these sphere influence. The program into this just shows you how it's just sideways for so long. Now the Russell we talked about at the top. Why did we talk about that? In the jobs numbers, how the small and medium numbers were better than expected, right? Smaller businesses. But look what happened. It can't get over this line of any sustainability, but it's trying. So really, if it gets over this cloud and interest rates can come down or stop going up, credit situation looks better, this then gets interesting for small companies. Now, if it doesn't, all this is just a big corrective wave of that, and we're going to go a lot lower because you can just see how weak this is. So you've got all those things that have to work, and they all interplay. The currencies and the interest rates will give you a good heads up. I hate this word macro because people just do it. What I see is people use it because they don't know why they're bloody wrong. So they've got to blame someone. It's the same people that were all buying stocks at the top, right? But look at what macroeconomics really is. It's kind of meant to be the bigger picture, how it all interplays, but just keep it simple. Interest rates, currencies, means imports, exports, stuff like that, or debt, when particularly if you're borrowing in different currencies. Okay, let's look at NVIDIA. So NVIDIA was just a great setup, and I want to blow on Trump, but we did call it. So technically, this is an important thing we do, where you should do something that's hot, but that's real, right? So something Kathy Wood should have looked at. You look at the extension and when it wears out. So you use you measure, right? You move, so this move to that move, and look where this went, 61.8, it developed a sphere, and you had up here, this is a quick Ichimoku, you had this twist, and then you had just old school, the cup and handle. We broke all that, and if you remember we talked about, so it broke this, so this is what we're seeing in NASDAQ right now, right? See this? If you think that's what the NASDAQ can do, potentially, if it does what NVIDIA does, right? So the reason this goes on itself, this became AI, and that just overtook everyone else. But it was because so many people were caught long this, because this is a massive holding, and Apple's similar when we look at that. They got to cover their deltas, right? Because they want to still be invested, or they have to be invested if they're in a fund or something. So they got to keep buying their calls back, right? But look where we went, and so everyone says this is a magic. It's all maths. So look where I've stopped at, plus 2.8, and that was right at the close, H1 right there. So it needs to get all over this and recalculate. So what we're doing is rebalancing right here. So that's a Chico. That's all that measures. So really we've just gone straight up with some violence. There's a 40-point movie. This was earnings, I think. Anyway, what was that? Whatever. That was this one, right? Anyway, you can see how far we are, and you can see, so remember the twist pulling it up, and this twist is pulling it down. Just not perfectly flat, just not as powerful. We can go all that into that in another time. Okay, Apple, very similar, see? Slower, and you got this channel that finally broke. So just think of the same thing. This is held by so many people, and the reason we watch this so closely, so many of the big central banks, like Norway, etc., the Swiss, they have massive holdings in this. You're not going to let it go. They pay a dividend. They're entwined and stuff like that, right? So these are kind of beyond a tech company. They're really a consumer and tech company, right? So you got all that recurring money from subscriptions. We just keep this here as a reminder of how silly it all got. And the same bloke that's telling you knows all about macro and everyone's a dead shit and blah, 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 and everyone's wrong and they're going about Russia this, Russia that. Not knowing any of it, right, as they sit in their little basement somewhere in the United States. But anyway, you can see how this has never bounced. What's interesting, I've always been fascinated by this, their biggest holding was Tesla. Supposedly, right? Yet we've never bounced. So here's a good example of how not to trade stocks. So what they would do is just keep buying their bad stocks and averaging down, right, and sell their good stocks to pay for it. A little bit more to it than that. But value is always important. Okay, let's move on to Exxon. So Exxon has obviously done really well compared to oil and gas. That's because they pay a dividend and they're really well run, etc., etc. And they're a lean machine. But look what it's doing. Big sideways move. Again, Murray Mass. Look at this. Plus 3/8, minus 3/8. You don't see that very often. This is on a weekly chart. That's how extended this was and didn't pull back enough to recalculate. That's intriguing. Now, we're right at all this support here, the 50 and the cloud. So this is going to be interesting when we look at... so we're just going to go... This is a broad overview. If I do get time, we'll do oil and all those separately, probably tomorrow or the next day. I know they promised that. Okay, bonds... Look at what I want you to notice here is a curve. So you don't need a chart to see this, even though we're going to show you one. You just look at this. The 2-year, this is in yield, was up 6 basis points for the week. But look how much the 30-year and the 10-year, right? 23. So you had a big flip here on the 2 and 10. So plus 23 versus 6. So that big yield change is massive, right? So that means the 10-year bond weakened compared to a lot more than the 2. They all weakened, right? Now, that was a different situation on Thursday. So you can read about all that. And so the higher for longer, very simple there, and it's go read that if you get a chance, the threatening long duration portfolios. So that means all the people that have invested longer term, that's all duration means, to capture the higher rate longer. Now if they're not leveraged, they may not care. The reason it's still relevant is if these banks are still badly managed and they have them on their books, right? Now, the bigger banks, and this is I assume is why Yellen keeps saying this, is expecting more banks to go broke. They get all these other benefits like using the repo, charging customers so much money. So if they can slow it down, they can each month just take a loss, right, and hide it in their earnings. And that's what they do. They don't get a run on their capital like the smaller banks, right? So that could be a lot of what's going on. If we look at the mortgage, look where we're back. We're back to 6.7%. And in some of them, we're up over 7%, I saw somewhere. So look at this across the curve here, what's going on in the mortgage market. Now, again, and so this is, you're also seeing this in employment factors. So all these things you want to take into account. If you got a job, you don't want to lose it. Now, those that had no responsibility, blah, 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 they just quit and all that. But it means you got to sell your house or rent your house out or whatever. And so you don't want these higher yields, right? So the higher, this was 716. It's now at 675, right? On that basis. That's from mortgage bankers, the MBA numbers, which we get each week. So commodities, let's look at those. Commodities were back up this week. And it's interesting what's going on. We all know, so you had the WASD number coming this week, but you had the acreage number was a complete shock to everyone. So we talked about that last week. You had these big moves on all the different grains, right? Which just wiped. So you're getting a lot of these moves just wiping people out. So last week, again, we're seeing, so weather's a big influence. Always is in commodities, be it energy, so natural gas, heating oil, but also obviously in anything that requires water and sun, which is grains, cattle, etc. The big moves again were oats and orange juice. And on the top side, also oil had a good week, as did heating oil and Brent, obviously. Sugar, which is interesting. Sugar often does bad with ethanol because they're so interlined, but ethanol and natural gas got whacked hard last week. So it's going to be an interesting week for natural gas and ethanol, given wheat, I meant to say corn, aligned with ethanol, and sugar, right, because of Brazil. So let's keep an eye on those this week. Now, if you've noticed, more times than not, if you have a big week up on a commodity, the next week it reverses. You're seeing a lot of that lately, right? Unless a trend changes. Copper had this false breakdown here. False breakdown is back in that channel. But it's so this is another one. The man, his dog, buys all this up because EVs. The smart bloke was buying it down here. So we want to see how that plays out. It had a good, there's a whole, go through the whole commodity weekly. A better breakdown here. Gold had its best best day on Friday for a long time. But you can see where we are. We're working through this. Back in 2011, this high, even though we flipped over it 3 times now for a triple top, we're still doing all this work around here. So you can still see that matters. That's got a lot to do with optionality, carry costs, and all that sort of thing. Okay? Energy, we can see, and do yourself a favour, go read the oil and gas round the barrel and vortex. Right? You can see it's trying to break this pennant. The danger is this is just an ABC, and it goes down. And the thing is, there's so many people trapped up here because the Uber bull keeps buying it on China, on OPEC cutting, etc., etc. Meanwhile, down in, it's going to be interesting with these releases. I saw that Exxon warned on their gas. But the fact this has stayed up so long, these guys are making boku money, right, in the US. Because they're increasing their market share all the time. And also Guyana's involved in that. So look at where we are. Now, look at how... So this got to 130. Look at all the volume that was done here between 90... 120, and then it's just dribbled down. So there's so many people. This is what a head and shoulders becomes, right? Left, head, if this goes up or right. Now, the reversal of that, in a perfect world, so OPEC obviously doesn't understand the market, but so they're artificially trying to hold it up here rather than let us probably dribble down to test this, right? But we'll see how big an effect that is. Okay, go read through those. Natural gas. It finally broke over on the weekly over that tanking, and now we're back testing it. So, big week for it. And remember what I said, often you have a big move up, big move down. That's what natural gas seems to do every week. So if it holds this tanking, it can get up to test this Cajun, right? That's weather-related, LNG, obviously for Europe. They're getting very full very quickly. But you've also got heat over in Asia, in China, etc., but they tend to be buying more coal. So you've got all these factors. So that's what I call macro. Understanding how all this shit goes together and how it can affect. Not jumping on it because some bloke you can cut and paste on. So there's also, go through natural gas in Europe. There's a big LNG conference going on this week up in Canada, by the way. So there'll be a lot of news on LNG. So we can see here, we're up on coal, we're up on pretty well everything other than natural gas in the United States, Holland, which is a Europe benchmark, and the UK, right? Notice that we're ethanol, I think I mentioned earlier. So BDI, so we look at this as a freight index. It's probably better to look at it individually as far as if you're trading iron ore or coal or something like this. It's obviously better to look at the breakups, right? The Panamax and Capstone, stuff like that. But BDI gives us an overall view. You can see that it totally collapsed all year despite everything and had a good rally on China hopes. It had another punt as China tried to reopen. And you're seeing this in all different commodities, a similar pattern, right? So that's why we look at that. Give yourself a read on that. It's very interesting and how the different commodities, the different ships, relate and to the different markets, the different zones of the world. Obviously, there's the Asian zone, the iron ore zone, Brazil, Australia, China. Then you got the whole grains thing out of Ukraine and Russia, the Black Sea, the geopolitical risk. So a lot of these things are done a lot better than the end of the world, right? Currency-wise, we had the US dollar. So again, everything changed Thursday to Friday, right? But we're looking at what happened at the end of the week. So we actually had the yen go up this week, 1.5%. So a lot of things that were getting smashed reversed on Friday. So the yen, the big carry trade. And that's relevant. So what's the dollar yen for that? That will impact your S&P. NASDAQ, etc., if the yen gets stronger and weaker, right? That's a lot. That's what one of our big bull calls was to do with the YCC and the reaction to that. So we saw so pretty well everything was up against the dollar except for the Brazilian real, the Canadian dollar, the Swedish krona, the Mexican peso, and the South African rand. Now, the peso we watched down in Texas, obviously. But the other reason you want to watch it is also the yen versus peso. It's a good indication because you can get lots of data on it, and it's going to affect other things. Yeah, I'm not saying the peso, the carry trade is obviously the yen, but peso has given a good relationship as one of the stronger variants of it. The other one is the stock market, right? But for those wanting to look at that, you can go do yourself over, look at that. Bitcoin been a nice rising wedge out of this double bottom here. I would have liked seen more impulse if I was a bull to see if we can test this 50 to see what goes on. So the question is, does it come down immediately? You can see it's doing all this work at the top of the cloud. Now, Bitcoin does trade very well technically. It's very fast, so you can't hope. And here's another look at that. You can see that big rising wedge. And very similar. See this reverse head and shoulders? It's what we just saw in the Nasdaq, right? So it just shows you there is a relationship between all this. Here's Ethereum. That was meant to be stronger than Bitcoin. Hasn't been. So you can see that. Go through all the other ones. You got the major banks all coming out this week. I'm sure the old Pit Boss will have something out on that. Preview of it all. It's going to be interesting. This is going to be the first one since the stress test a few weeks ago. So if they haven't already announced an increase in dividend, I think they all have, the majors. There may be mention of more buybacks. But you'll hear there'll be really interesting earnings report conference calls when they talk about obviously the ones that were involved in the New York and California bank blow-ups, Republic Bank, etc. BlackRock will be really interesting to hear about how the actual funds coming in and out, right? They're the second biggest fund manager. So those earnings are interesting. Delta's always a good one for jet fuel. So I think we went through everything there. CPI, Bank of Canada, bank earnings, the other banks, China data, and UK jobs. Okay. So the rate decisions we got, remember, RBNZ, BOC, BOK, Peru. The reason I look at these LATAMs is because Brazil and Mexico are a big important part of the energy market, and also just big populations close to home. So I think we went through everywhere. Have another look there. Global wise, we got some big things going on. We got the Asian foreign ministers meeting with US, China, Russia, and other key partners. I did read something that Putin's actually going to be there. So I don't know if that's just BS, given he's got a warrant on him. Biden's going to Finland for the US Nordic Summit over Helsinki. That'll be interesting. Should get some rallies to turn up at that one. We have the Far East Grain Forum in Vladivostok over in Russia. That's going to be interesting who's there. Very important because of Ukraine and Russia with grains. Whether that just becomes a political thing, more than likely. You've got Macron meeting with Modi. So Modi, remember, he's been getting around. He did the quads with Australia, Japan, came to the US. The UK was there too, were they? Yep. And now he's seeing Macron. I don't know what Macron's going to do. Is that just a diversion with India? We have the EU-Japanese summit. That's an important one. Over in Brussels, remember we got new BOJ. It's going to be the PM. Then at the end of the week, we got the G20 finance ministers meeting in India. So India, if you notice, is getting more and more... he's played this very well in with the West while getting cheap oil from Russia. Well done. So you've got all these little things going on, which are going to be interesting. You've got the NATO summit going on, the 74th NATO. That's going to be interesting. You're going to get inundated with all your damn political fake news crap. Russian lovers, Russian haters, all that. It's a bloody war. People dying. Get a grip on it, people. And so that's pretty well all that. Out of Europe, you've got some things that'll move. The main thing is going to be the inflation reports. But you've got a bunch there. Just go through them. I don't want to bore you with it all. Another meeting that may be interesting is Schultz, out of Germany. He's going to be meeting Albanese. from Australia. So basically what you're getting, the reason we're looking at these is you're getting all these individual trade situations, right? Trade deals going on and on. So you've seen globalization getting broken down back towards individualism. So people that think the WEF is taking over the world, I know a lot of people want that, whether it be an excuse or whatever. It's not quite going to plan because you're getting a lot of these breakaways of different organisations that have nothing to do with the WEF, right? As much as fake news or someone on the Twitter might agree with you that they are, a lot. I mean, I just see stuff I know personally that's so far off. Anyway, I think we went through most of the earnings, just basically the banks. The other things we got out this week, go through, look at the events. They're pretty cool. You've got a bunch of FDA and biotech summits. One thing I find interesting is Carver has a sell-side analyst for the first time tomorrow. You got a bunch of bankers speaking. Monday's full of them. You got Prime Day is for 2 weeks, 2 days. Sorry, it probably becomes 2 weeks. So it's going to be a big deal from Amazon. At the same time, you're going to have other retailers, Walmart, Target, Newegg, Overstock, who just bought BBBY, remember? Macy's and Best Buy all out with similar promotions. This is going to be interesting for people, particularly electric vehicles versus traditional vehicles. Or ICE vehicles as they call them these days. So you got the trailer truck is going to have its first capital markets day as a standalone company. So it's going to be interesting given where they are, what's gone in Germany, and its relevance to all the other companies. And not a lot else. There's other stuff we'll put out there. Mainly the Fed and the earnings. This could be interesting. So Mester is going to speak about Fed Now, about real-time payment system. This is particularly good for those that think we're going to lose all our autonomy. But you got JP Morgan there, Wells, US Bank, Fiserv, Jack Henry, PayPal, and Block. Right? So they're all going to be impacted by Fed Now. So that's a lot to do with that digital currencies, etc. Now, this is another thing that may... So these are all things that may happen. So the FTC, Lena Khan, is going to testify for the first time. And this is... she was subpoenaed for documents related to the agency's alleged actions against Twitter. So, things is, a lot of these things, you don't get real news, right? It's not covered by mainstream, because that's kind of what was involved. It's interesting. Anyway, you got the OPEC's report out on Thursday. Remember, when you get that out, you also get your EIA and IEA usually the day or two after. Okay, so have a great week, everyone. That's it. Here's all the charts. Let's have a quick look back. All the longer term charts that I showed you, I mean, they're on here, right? So this is what you all looked at them, but just you see if the bigger picture, if you're interested, that's where all that comes from. You can see oil on the daily. You're just looking at that little bit on the weekly. This bit here, but you can see where it needs to get above here. And it did close above the 50, see? On the weekly. On a daily, sorry. So that's why we want to go to the weekly. We're right here at the cage, and you can see how it all works in. If it can get above here, we get this 50, which is the big level. You can see all these levels up here. Remember, these are all option levels too. That's why you get these quick moves. But you can see also the OPEC meetings, how they've done nothing. I don't want to spend too much time on those things. It's been a long session. Everyone enjoy yourselves. Have a great week. There is a lot out. There's a lot of geopolitical. There's a lot of earnings. there's a lot of numbers, obviously, the CPI. So watch how the bond market reacts to this, particularly the second reaction, right? Not the immediate. So you want to watch the 2 and the 10. You also want to watch the 5 there. You want to watch dollar yen, in particular out of currencies. And also keep an eye on the yuan, like if the PBOC or other government announcements come out. Keep in mind that with the yen weak, they've got to kind of let the yuan weaken with it, right? So all those things play out together. Okie doke. So that's all from me. If you like and you want to see more of them, let me know. And we'll see if we can get some other people back out. So thank you for all those that support Traders Community. Either in a reaction, those putting up articles. It's all really good stuff. It's all experienced traders stuff. What you want to see rather than what they want you to see. How's that for conspiracy? So hit us in the comments. Make sure you like and share. If you like what we're seeing, keep it up there. You can hit us on Twitter. You can hit us on the website. So don't be strangers, and we'll try and do more of these. Thanks for listening. Bye now.